Hi guys, welcome back to my YouTube channel. My name is Sam and I am a chartered accountant and I am on a mission to build wealth, and I want to bring you guys along with me so that you can build wealth too. And as an accountant, one of the questions that I get asked quite a lot is whether I should set up as a sole trader or a limited company. So you might be moving away from your 9-to-5 job and setting up on your own, or you might be starting a side hustle and not sure which structure will be best for you. So today I'm going to cover both structures, the positives and benefits, and the tax implications for both so that you can make the best decision for you. So there are two main different types of structures that people set up as. It's normally a sole trader or a limited company. So a sole trader is you personally, you are your business, and a limited company is a company that runs the business separately from you. So the benefit of a sole trader is if you're just starting up, it doesn't require a lot of admin work. You haven't got to register a company with Companies House. All you need to do is track all of your income, all of your expenses, and then you submit a self-assessment tax return to HMRC at the end of the year. They are bringing in new rules where if your income as a sole trader is over £50,000 for the year, you will have to submit returns quarterly in line with Making Tax Digital, and then annually as well. So you may need an accountant to help you with this, but if you are just starting out, your business is small, your income is not going to be over £50,000, you can set up as a sole trader, track your income and expenses, and then declare your income, expenses and profit to HMRC at the end of the year. With a sole trader, you're not separated from your business, so it can be a bit more risky depending on what you're doing. If you have a high risk job and you are a sole trader and you own, for example, a house, or you own some cars, or you own some assets, if you get sued, your business gets sued, whatever you're doing, if you're this plumber and you get sued, all of your personal assets are up for grabs. So if you didn't have that much in your company, but you owned a house, your house could be up for grabs if you get sued. If you're just starting out, the risk is pretty minimal, then you can set up as a sole trader and you don't have to worry about that, but that is something to consider when you're setting up as a sole trader versus a limited company. Another benefit of a sole trader is that your information is not on public record. So when you register a company, you register that company on Companies House. Anyone that wants to can go onto Companies House, they can view your company information, they can view your company accounts. Depending on what accounts you file, you can hide certain information, but there is a lot more information available on public record, whereas with a sole trader, you are just filing directly to HMRC. HMRC are the only people that can see the numbers, no one else can see that online. So then if we compare that to a limited company, so when you set up a limited company, you are completely separate from your limited company. Your company has something called limited liability. So if something went terribly wrong and you got sued, everything in that company is up for grabs, but your personal assets, your house, your car, your money, whatever you have personally, is not up for grabs because your business is separate from you. So you have that extra level of protection. So as previously mentioned, when you register a company, the company information is on Companies House. This is on public record. Anyone can go and view this information, so they can see your company name, your company address, your name and your accounts, and depending on the size of your company, so your income and also your assets, that will depend on how much information within your accounts is on public record. With a limited company, you do also have more admin, so you have to file your accounts annually to Companies House, as well as a corporation tax return that goes to HMRC. There is a corporation tax on the profit of the business, and then if you have taken any dividends or salary or anything like that that you need to declare on a personal tax return, you also have to file a personal tax return. So that's compared to the sole trade where you just filed the one personal tax return. With the limited company, you have the accounts, the company tax return, and your personal tax return. So as you start to scale and grow, it's probably going to be more tax efficient to set up as a limited company, because if you have £200,000 worth of profits, yes, your company is going to pay corporation tax, but then you can choose how much money you take as dividends and then what % of tax you are paying. Whereas if you had £200,000 of profit in a sole trader, you have to pay tax on all of that money. You can't choose when and where to pay the tax. You are paying the 20, the 40 and 45% in tax. Also, as you grow, your company is going to have more security if you're set up as a limited company, and you're also going to have more authority with your customers and your suppliers, and there's going to be a higher level of trust because your company is regulated and has more regulations around that, whereas the regulations aren't so much with a sole trader. Also, if you're looking to get investment and have investors invest in your business, they're not going to do that in a sole trader, but they would in a limited company, because again, you have more authority and more trust. So initially, it's probably more beneficial to set up as a sole trader because you have lower startup costs, and if your income and your profit isn't that high, then you're not going to be paying the 40% income tax on it anyway. And then as you start to scale and grow and you want a bit more security, a bit more authority in the space, then that is when you would shift from your sole trader to your limited company and set up as a limited company and run as a limited company. The only time you would set up as a limited company straight away is if you have quite a high risk business and obviously your personal assets are up for grabs and you don't want to risk that. So you could set up as a limited company straight away, but it does come with more admin costs. And normally you would need an accountant to file your accounts and corporation tax returns. So hopefully you found this video useful. If you do have any questions, please drop them in the comments below and I will respond to all of them. And if you did find this video really helpful, then please like and subscribe so I can create more of them, and I will see you again next week.